Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Please be advised there will be no stream tomorrow or Thursday due to the holiday in the U.S., the 4th of July, Independence Day celebration. And those of you who've been following the stream, you know that we've been talking about the holiday rally, something that is you might say incidental, but may have a statistical edge, where the market seems to throw a party in front of federal holidays. Now, why does this happen? Well, can't say why, except it tends to. So I have been posting in the TraderLab, and I have mentioned in the chat that we are anticipating a rally going into the 4th of July. So we may be having that. So let's get into things and take a look at today's structured trades. Also, of course, be aware that this morning, starting at RTH Open, we had central bank press conference, I guess, Q&A with Lagarde and Mr. Powell answering questions. So that was a little bit of a wet blanket. And that was at 8:30 Central Standard, RTH Open, and then 9 a.m. we had the JOLTS job report. So we had a couple big events around the Open, and then off we go, as they say. So let's go take a look. So you guys know, if you're visiting the stream, this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. This is about market mechanics. How does the market work? Why does it do what it does? And how might you get in alignment with it? Based on structured trades that are available to everyone in the Bookmap Discord TraderLab community, which is a no-cost community, you can become part of this community if you choose. Leverage the collective experience of the group of traders. It's a serious community. It's about the business of trading. Trading has many different elements to it, but in the end, it's a business. The model that I always consider a good business model is the way casinos operate. Now, we're not talking about the gamblers. We are talking about the casinos. The casinos operate and they only play structured games that have a statistical edge. They are in an uncertain environment because they cannot control the cards that come out of the deck or how gamblers play the cards. So they are in an environment they have no control over. What do they control? They can only control how they play their games. Now, the difference between a casino, which is a business model and extremely successful, and us is our emotional impediments or attachment to the outcome of each trade. And I have been mentioning this recently about the psychological impact of our primal wiring. And this is embedded in our DNA. It's more reptilian or limbic oriented. And what it is chemicals, the fight and flight thing. And we probably, most of us, don't really think much about it, how much it impacts our ability to be intentional. The logical brain, call it the developed brain, the reasoning brain, is built on, and I'm giving a very broad stroke and it's an opinion, is built on top of this reptilian brain. We have survived as a species and flourished because of natural selection, if you accept that, and the development of anticipating danger, running from danger, and this behavior is there. So when we step into the market, this more primitive instinctual behavior cannot differentiate between our job or our business and our emotions. And what happens is the chemicals that are released when we're in these states will swamp and supersede our intention because it's much more basic to our survival. We need to become familiar with this. We cannot suppress it. We cannot even control it. What we can do is understand it, and it takes time to understand. The other element, and this is something that I, in my own development as a trader, really had to wrestle with because I didn't understand it. I thought it was willpower, and willpower is not the answer. Recognition is the answer. Understanding that every moment is unique in the market. And often what happens is when we're projecting, when we're in the present, instead of being in the present, we're thinking of the future. Oh, this trade doesn't look good. I'm going to get stopped out. Or this is counter rotating. I'm going to move my stop to break even, where the actual trade has not failed based on a vetted plan. So we deviate from our plans. Imagine if the casinos, when the cards are coming out of the deck, changed how they played the game. Well, they don't. Why do we change the game? Because the future, which has not happened yet, we are actually living in the future when we're actually only in the present. Our mind and our fear has taken us into a negative future event that hasn't happened. The same thing with the past. We take the past and we bring that into the present and project it into the future. The key to trading, in my opinion, is staying in the here and now. My mantra, and I'm lending this all to you, is be here now. Don't be thinking about the negative potential consequences based on a past experience, like getting stopped out. Don't think about the profitable trade you had, and now your dopamine is circulating in your brain and you feel like you're invincible. All these emotional triggers are going to come into play, and you need to become conscious and aware. And like everything, you have to vet these ideas and find what resonates with you, because we're all unique and different. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember, this is not a trade calling room. This is for educational purposes only. Are you guys hearing me okay? Okay, how are we doing in YouTube? Okay, Nikos, thank you. All right, thanks everybody. Okay, let's, as they say, move the ball forward. Now, a couple of things here. Well, there's something. Let's try this. Let's look at the ETH very quickly. Now, there's something that is pretty important that I want to point out. Yesterday's low, and if you remember yesterday's low, depending how you look at it, this is a high volume area, and the market tends to be attracted to high volume. Notice where the ETH low is. So we come down, we test it, and then we come back up. So the thing about this is, yesterday this price was too low. This is a higher time frame level. What we did in the ETH is we tested it and we came back above it. Isn't that interesting? Now we have the overnight volume point of control. Let's just look at how this might work. This is the retail price in the ETH. So this is high volume. And write this down, guys, and take a few notes so you maximize what you get from the time you invest here. The market is an auction, and what that really is a shopping experience. The simplest way to relate to this is shopping. And when you go to the store, high volume is where a retail price is. And consider the higher time frame your big box store. And as you go down in time frame, and this is the ETH full time frame. In other words, this represents the highest volume from the ETH. So most of the volume took place lower in the ETH. And here's the ETH over here. So you could see where we spent our time. Most of the time was here, and this is where the volume was. So retail. And what the market tends to do is it rotates. So this is what your consolidation looks like, right? So too high, too low, too high, too low, retail. Now let's look up here. We get the same thing. Too high, too low, too high, too low, retail. But if you leave an area, and now the highest volume is here, and you notice there's more volume, it is saying at the time this is too high. So this is retail. So, okay. So right now, coming in, we're going to look at this and we're saying, well, okay, this is the retail price. But now let's look further up the food chain. What do we know about the ETH? So this here is your retail price. Everything above is too high. This is the ETH mid. I'm going to give you some statistics, by the way. Grab a pen and paper, write these down very quickly. We're opening lower inside of yesterday's range. This is the RTH open, okay? And statistically, getting to the overnight mid is an 83% probability. Getting to the previous settlement, a 72% probability. Getting to the previous point of control or retail price from yesterday, which is here, is a 70% probability. Taking out the first hour's high is a 69% probability. Isn't that interesting? And then we have yesterday's high. So, and what's over yesterday's high? Stops. And I have another target higher up right here. 40, I think it was 47-ish or 46, right up in here. This is our next target, a high volume node. So for me, looking at the open and thinking that holiday party time, I want to get long. So for me, I have not had a short today. I've only been on the long side. Doesn't matter. You can trade long, short, and whatever your plans suggest. But that was my thing. So let's go take a look. Is everybody tracking? By the way, if you have questions, please post them. I'll do my best to answer them. This is the RTH open. Let's go take a look. So statistically, I have this high probability, and this is high probability. And oh, by the way, overnight volume point of control. I don't think I gave you that one. That probability is 83%. And either taking out the previous high or previous low in the RTH is an 85% probability. Now, if we're kind of leaning to the north side, that also puts yesterday's high or low on the table. But why would I be thinking the yesterday's high versus the low? Because in the ETH, I already tested it, and I'm now above it on the open. Now, of course, we could take it out. Nobody knows. Is everybody tracking? If you have questions, post them. I'll do my best to get back. This is what I do, and what I think traders should be doing is think about something called context. Everything in trading, and again, I'm only giving you an opinion, is not built on your indicators. It's built on the condition of the market and the positioning of the participants in the market. So you need to be thinking about, and write this down, where is the fuel? If the market, we squeezed out shorts yesterday and had a neutral day, which you guys know if you're in TraderLab, if you remember, that was all posted before the RTH open. That's what was anticipated. I did not anticipate this kind of open, and the fact that we were taking out yesterday's low. This is part of the joy. So how does this work? Yesterday we sold off, so it was selling, if you remember the stream, and then a short squeeze going into the close. Then I'm anticipating continuation higher today. What do? The opposite. We go lower. What does that do? Write this down. The market goes up to go down. The market goes down to go up. There's two sides always at work in the market looking to discover a fair price. And whichever side, if we get lopsided one way or the other, it's going to trap the traders on the opposite side. So the shorts got squeezed yesterday into the close, and then the longs who are in the market looking for the continuation got thrown under the bus this morning in the ETH. And then those shorts that are in the market in the ETH potentially become the buyers, which take us over yesterday's high. Does that make sense? And it doesn't have to do that. You know, that's part of the joy of randomness. But if we understand how the market works, we can anticipate. Write this down. You got to anticipate to participate. So let's go take a look. RTH open, high probability to get here. High probability to get here. But we already took out yesterday's low. And this was our target from yesterday. So all it looks like we might, and nobody knows. So let's remember. Don't know. Open. So let's look. High probability to get here, already got there. High probability for this, and we're looking for upside. And who knows? Oh, by the way, the previous settlement, that's also another statistic. I don't know if I gave it to you. Where is it? 72% probability. So I'm skewed to the long side based on the context and the 4th of July party. Okay, let's go. RTH open. Now, this is always, I always do the same thing. These are structured trades. Now, the thing about a structured trade is it must, and I'm going to say again, must be aligned with the context. These are not mechanical. Many developing traders think if they see a line or something move, that is a trade they should take. The key component in this is context. What is the context? Well, the context is we checked yesterday's low in the ETH, and this is a key level in the higher time frame. That means if I don't come back under here, then the market that is short will get squeezed, or the participants. So when I see this, I am not taking a short. The other piece to this was Powell Q&A at 8:30 Central Time. I had no trade. I don't trade. I don't care. Doesn't matter. If you're compulsed and you feel you have to trade, that's psychological and emotional. It has nothing to do with business. Just an opinion. Me, not so much. So, because Powell was talking, I did not get engaged until a little later. But I'm going to show you structured trades because that's why I'm here. But for me, risk management is job number one. So this right here, I see a buyer, and that's absorption. That potentially can give me a downside rotation. This has a high probability of being checked, as does this and what's above us. Okay? So I come back up, I check this, let's watch, and I take it out. So I see my buyers here. Now, I'm not taking any trades, I'm just telling you. And right here, this would be on the run. There is, again, I didn't take any trades here. This would be a TraderLab structured trade. The thing about this is a breakout trade, and it is based on the opening swing high and the variable high volume node. I'm going to label this. It's called an HVN. And it's where the volume is. So let me label it. And this is just a process I follow. I label these things. Since I don't use indicators, I need to track volume because I'm using something, remember, the volume profile. And the volume profile just tells me where the volume is, which is participant based. So right here, I have my seller. I have a buyer here. I have a seller here. I have sellers. And right here, now I can't tell what's happening, right? When I see the buyers cross over, it is suggesting these shorts might be, and that's all you get in trading, might be stuck. In other words, they were absorbed. When I come across, right here I have my buyers. Now you'll notice I had sellers here. So right here I get my buyer, and you see the pause. So this is potentially this seller defending and absorbing. Now, we don't know what their agenda is. It's part of the joy. Pull back, and for all I know, it's coming back here. I don't know. What do I know? Too low, too high, right here. So consolidation, two-side, right? So I see this guy, and I'm looking for the breakout, and it rotates, absorbed. So now it becomes either we're coming back here, here, or here and falling out the bottom, don't know, or we're going to squeeze out the opening swing high where this stops. So here's what happens, break here. So right there, and it's covered up, you've got buy stops coming out, absorption. So the sellers are here. Now we break the stops. We pull back to here. A hair above it. Shoot me. Right here. So right here, the sellers here got stuck. So they sold, they got run over. The buyers consumed them. Think like Pac-Man. Remember Pac-Man? Well, this delta, which is aggressors, which is buy stops and maybe initiators, right here, we pull back to the delta. And this is a potential long. Now, this is a different kind of, this is a structured trade, but it's more advanced. And this is not where traders should be starting, because your risk on this is out to here. Now, once you start rolling away from it, you know, you can move your stop. Where what I like to do is I look at where the short's trapped. Well, here and here. You can put your stop under here, you know, once you get rolling. Okay, up to you. Now let's get cooking here. So watch VPOC migration. Now right here is another potential trade that is going to develop. Let me explain it to you. There's two possibilities here. I'm going to label. Let me get this out of here for now. And again, I was not taking these. I'm just narrating structured trades. Everybody has to decide what they do and when they do it. I did not take these because of Powell. Otherwise, they're trades. But for me, risk management is more important. So I just look at risk and I go, well, that's okay. Got all day. Now, and this is a variable high volume. So I'm getting the up move that I'm anticipating. So I kind of have an idea, right? So let's look at how we would navigate this thing. So the market's moving up. Let's remember what we have going on here. This is a target. This is a target. This is a target. Yesterday's high is a target. And 40, whatever it is up here, this is a target. So I have all these targets, as I already went over. So now let's suppose we want to get into this. Let's look at some opportunities here. One second. I got something flashing at me here. Hold on a second, guys. So right here, I get VPOC migration, VPOC migration. So right here, I'm looking at this, and I'm looking at the following things. If I break low, it might be saying this is too high. The VPOC migrates down. And what this is telling us is this is high volume, this is high volume. This is an outside edge. What this is called a distribution. And what a distribution is really a consolidation. So if we look at this structure here, this whole thing, it is a big consolidation, okay? So we broke away. When you break away from an area, for example, down here, and you run, this creates something called a low volume area. And that is created by this kind of movement, because it doesn't chop, 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 it just runs. Then it'll go back into rotation potentially again, or just keep running. Well, once we see this area out here, if we get too high, the market can then rotate on itself and come somewhere, here's the joy, somewhere outside. And that creates something called mean reversion. And mean reversion is rotational trading. It's a separate plan in a plan. So what I'm thinking about in this is, I want to be long. Where do I get long? If I'm not already long, I would need to wait for it to come outside and take out stops that are being trailed at outside edges. Somewhere. And that's part of the joy is where. Well, you got VWAP, you got mid, you got this. But more important than VWAP or mid, which are not really part of this for me as far as locations, is structure, context, which is this. So let's go take a look. So what happens here? We pull outside. I pick the stops here. Come out here. VPOC migrates down. VPOC migrates up. So I'm bang, bang, bang. So in here, and I wrote this down. Let me see. Okay. Trying to look at these trades here. This becomes too low, too high, too low, and we're still trying to go for this, and that. So these are all the targets that are lining up. So you have a choice here. Now, the problem, I'm going to tell you the good news and the bad news. The good news is trend is up. But what's the bad news? The bad news is if you take this trade, you have to be able to enter and scale here. That's the problem. So for me, it's not the behavior, which is auction-based. It is the range to qualify. I have no trade here. I pull back outside again. I see absorption. So the sellers are absorbed. I have my sellers here. They were absorbed by the buyers. Come back and look over here. This is all fine for potential longs, except there's where you got to scale. So I cannot enter here. It's just not in my skill set. So for me, I would probably get in around here, and I got to scale here. Doesn't fit, no trade for me. Doesn't matter. I just don't bother. This is a target. This is a target. Now, overnight high. Right here, I see selling, and watch what happens here. So we've gotten a lot of our targets here, right? And 3350 is a high volume node or a micro composite high intermediate time frame node that operates the same as this, except it's higher time frame. So there's a 70% probability of coming back here today. And then I don't have a statistic for this, but because it's higher time frame, but I know the market has a tendency to come back to these. If I'm coming here, I'm not definitely, but potentially coming here. And then there's more. We have our JOLTS job report, by the way. So this right here, this is an actual short. No, again, I'm not trading these because I'm waiting to get Powell out of there and a potential, just waiting for these reports to clear out. So this is a short, not a trade I would take. It's counter trend, so nothing I would do. We pull back here to the VWAP. I get VPOC migration. Now, again, JOLTS report is coming, so nothing for me to do. I have no trade, and this is not a trade I would take. The VWAP, not a trade for me. So no trade. 9 a.m., JOLTS. So I don't have anything here. I'm just hanging out. Now it gets interesting. At 9:12, now let's look at the condition of the market. Variable, let me get this here. I got to keep up. You'll see why this might be important. Now I have my reports out of the way. I have targets open above yesterday's high. I know this is too low, and I know this is retail. This is a specific condition. VWAP does not matter. Mid is not part of this. I know I'm not saying you can't say, well, there's the mid, but that's not the reason in this context. These are not players in this context. Up to you. Me, not so much. What is the player in this context? The behavior in here and this. So this is too low. This is my retail price. Now we're in a condition called mean reversion. So what I want to do is get long. So at 912, I read the long right here. Now I look at this, and it has nothing to do with mid for me. It has to do with this. Seller, seller, going to zero. And this is my location. So I'm looking at this to get long. And the trade is to come here. This is called mean reversion, a specific trade plan inside a trade plan. Let's remember, trend is up. Yesterday's high has stops on it, over it, and I want to get long to trade into those. And there's been resting liquidity over yesterday's high, which I'll show you when we get there. So right here, here's what I see. Sellers, a little bit of buying nudge, sellers, and as far as I know, and this is where I'm looking. I want to get long out here because this is the last location. It was too low. Remember, shopping. So what do I see here? I see a buyer, I see a seller, and then I see a change in behavior. Right here, I look at this and I mark this on my chart. I'm going to show you what I did. Now, here, I'm back in the game. Why? Reports are done. So let's look at where the high volume is here. It's here. And you can see it right there. Back, hold on a second. There. So there's the volume, okay? In this structure, I call these microstructures. Now, I don't know. I mean, right here, I could have a buyer and then these guys get trapped and, so right there, I can't do anything with it. But notice the change in behavior. Where's my buying leg here? Do you see any buyers in any of this? What about that one? Is that a buyer? Well, right here, I don't see the buyers above. I see a seller. And what's up here? Nothing. A little bit of buy stoppage going off. Yeah, thanks. Here's a coupon to the buffet. So right here, I see the sellers. I see no buyer. So, and this could have been it right here, right? But it's not outsized. Sellers. Okay. That's why this one doesn't mean anything. It's no different than this, except I got some buyers here. That's different, isn't it? So right here, sellers, and I'm thinking, what? They're going to be trapped and off we go. Well, that's what it's telling me until this. When that happens, that becomes a trigger. Now, let's look. Now, I saw this and I'm going, well, that looks like a long. I get this now, and right here, I see my buyer. So I see a change in behavior. I see my buyer. I get a seller. Buyer is active there. Buyers take a shot here. They get stuffed right there. Buyers try here. Sellers absorb them. Buyers are trapped here. And I got my sellers here. I come down. I pick these guys off here. I'm looking at this. And I'm going, because here, what happened here was, I looked at it and I'm going, well, I got this. So I'm looking at it from a few different angles. I'm saying, well, I got this because there's my high volume. There's my seller. There's my resistance. There's my buyer. There's my seller. You see how it's capped? And there's the high volume. Let me show you. So I'm in a bit of I want to get long, but right here, you see it? This is a bracket. So right here, too high, there's my seller. Right here, too low, there's my buyer. But my sellers, the down rotation is still stronger. So I come down here, and it looks like these buyers are going to get thrown under the train. So right here, I break. And I put an order in. I'm trying to remember where it was. I think it was right here. Yeah, it was right here. And because I see the buyers again, and I have these guys stuck, this is order flow, and then I get selling underneath, and they're absorbed again. So it was right in here. And it was kind of on the run, which I don't like doing, but that kind of was right there, was a stop pick. So it was a long, and this is where I'm going. Then it is, since it's after 9 a.m., I'm looking for the IB high, the first hour's high, I think 69% probability, and then yesterday's high. So this is a scale. Now watch. Watch where we come back. So now what do I know? I know this volume now in here. So I have this, and I have this, and I also am going to have the volume in here. This is a potential long here. Again, on the run, and you got to have enough range to scale. These are called mean reversion. This is the mean. Least favorite construct, but this is the context. So for me, I have to only trade outside in. I can't trade here. I target this because this is what reversion trading is. And then if we come out the other side, because statistically, I'm going for this and yesterday's high. And let me see if that liquidity is sitting here. This is resting. It's not algo. This is algo nonsense. Ignore it. So let's watch. So you get your long, you get your scale, you get your pullback, you get your scale. You got to have enough range. Now let's watch the trade. Where's our support? Another long right here at 924. So you have several opportunities to get long, and you're always coming back to the mean. This is our next target. I think it's a 69% probability. Yesterday's high, 85% probability. We'll take out yesterday's high or low. Let's watch. There it is. And I think we're going to get caught up here. Yeah, that's it. So that's it. We're current. Now for me, now I can't trade once I'm streaming, so this was my last shot on goal, and I'm done for now. Questions? Thanks for your patience. Can you see, and this is what's important about TraderLab, and for TraderLab participants or those of you who are visiting in YouTube, by the way, I can't see your questions. I'm going to get these up here now. Here we go. Well, I'm getting the question from the Bookmap TraderLab in Discord. Do I always stay out? Yes, I do. When Powell speaks, and the reason I stay out is there's thousands of trades, in a career. And in this process that I share with you guys, there's as many trades as you want to take that fit what you vet that gives you an edge. But if you're using TraderLab structured trades as a template to build the business of trading, there's a fair number of trades. The thing about TraderLab, it's about, I guess, the goal of TraderLab is to help traders be profitable. It's not activity, it's range. This is a structured trade right here. It's called the IBF. This is also a structured trade, more advanced. The goal is to come here. And these are all in the TraderLab. Why might we think about getting short here, by the way? We got our primary target, yesterday's high, and which means we squeezed out the shorts from the ETH. We have resting liquidity here. Notice the absorption. Now, this doesn't have to be your trade. Let's go into microstructure. I'm just going to show it to you. And I was starting to say, what about the TraderLab? It's the range. These are 10-point trades. Coming up, 10, 15-point trades. Yesterday, we had 20, 30-point trades that I showed you guys in the stream. And I know a lot of traders are into action and clicking the mouse and, kind of, I don't know, but, and I'm saying is that's all fine. If you have an edge with that. What I found is less trading, more range, because my risk is pretty constant. So when you shorten down your range, you need more accuracy, better entries, so it requires more precision. When you're developing trader, you don't have precision because you just don't have it yet. You haven't developed unconscious competence. So how might you compensate? It means you're taking pretty much the same risk. But if I'm going to put risk on, I want meat on the bone. I'm not trading. I'm not going to risk 2-3 points per contract to get 3 points. I'm going to risk 2 or 3 points per contract to get 8, 10, 15, 20. Because that allows me to take stops along the way and still potentially have a good day. And psychologically, I'm also in pretty good shape if I take a stop and I still know I've got 8 and 10 point opportunities because of the fractal I traded. So let's look at the short and post your questions. I'm going to label this. I should say I'm going to mark it. I don't label it, but let's look at what it says. So there's our liquidity. We're looking at that as targeting. We got yesterday's high, and this is still an upside target, which doesn't matter. I know it's there, and there's a possibility we'll come back there or not. Not my job. I can't predict anything. So let's look at where the volume is. I've got it here. And you guys should be, when you do replays, you should be doing this because it's going to help you train your mind to recognize what this represents. You got to do it or a good way to do it is to do it by marking it. Let me mark it a little further. This is a consolidation. What a consolidation is, if you think about it, it's a pause, and then the participants are checking the valuation. So let's look at what this is. This is a consolidation right here, right? Inside of this is volume here. And let's look at now the order flow. These buyers were absorbed. 566 buy stops. Thanks for playing. Really? Over yesterday's high. 566. That's nice. And then we have the sellers, the passive side, absorbing those buy stops. This is how Bookmap can give us insight. Because otherwise you just, what do you see? A candle going up? What is that going to do for you? I don't know. I'm just saying it didn't do anything for me. I don't use candles. Doesn't mean you can't. But I want to see what's happening where the participants interact. When I came up here, notice this liquidity, selling icebergs. So they were selling into the stops and they were absorbing these buyers. We pull back. Now, if you got short here, you could have a problem. Here's how I could tell. So right here, I see my sellers. I see my buyers come back. I see a seller absorb here. Gets pushed through. I see my buyer here. Now, this hasn't happened over here yet. Buyers. So I had a buyer here, sellers tried, they got shot. I have buyer here, I have seller here, buyers are here. What's going on? Where's my sellers? I get my buyer here, I get my buyers here, and now I see my sellers again. And the stop's going off. So this becomes high volume. Now I get my buyers here. Sellers again. You see them here? Seller again. Seller. This microstructure is too high. Not convinced yet. I'm still, don't know. Pull back here. It is now, because the buyers were absorbed here and here, if I pull back here and I get no love, it's a high volume node in this distribution. And if I can't break above this, it sets up the potential to come back through here, take the stops, and come back here. It's called mean reversion. It's from the other side to there. This is a structured trade. Now, let me take it a little further for you. Let's assume you didn't trade this because you're not yet developed to trade this. This is more advanced because you're trying to pick the high of something. And so it takes a little more skill. So let's say you're a developing trader. This is called the IBF. The IBF would be a short here. And this is your target here. It's just another way to do it. But remember the consideration, and this is also mean reversion. That trade from out here is mean reversion. That's the mean. All we're doing, remember what the long was. It was mean reversion from the other side, coming up to the mean. Remember? All we're doing now is coming the other way, back to the mean. Now, here's what can happen over here. We can bounce from here up to the IB high and either take it out or come out, pick stops, and come back, fall under this. So I'm telling you what can happen. Or, but here's your obstacle. Let me show it to you. So the short is to here, and then either we break under or not. Then there's the potential from here back to there, and this is your outside edge. So we have short to there, then either here to there, or there back to here, and down. Or, I got to give you the ors because that's all you got. Notice the absorption here. The sellers got stuffed. Long to there, and if I come out and then squeeze out this leg and get over here, then it puts the next target on the hit parade, which is this. We never have to come here because the primary trade was up into this. So after this, it's punt. Is everybody tracking? So it's either here to here, and then new high, or here to here, back to here, rotate out and get the longs. That's what it is. This is VPOC migration. This is suggesting upward pressure, not a recommendation. We'll see what it does. Questions? Now, here's the other thing about this. If you don't have a trade, you just sit back. You're not here to be going for the action. If you are, that's FOMO. You just need to be calm and wait for your bus. If this is your bus, this is your target. If this is your bus, this is your obstacle. For me, I don't have a long. Doesn't matter to me. The trade for me was the short because it's mean reversion. It could go from here and take out the high of the day. And I'm okay if it does because I've hit my primary targets. It can do this. It could keep going. It could do anything. The market is random. This would be my last trade at the moment. I would be if I'm holding a runner, I'm going for to come out and come down here. If we can't, then I push off. And if I get through here, which is resistance for me, this outside edge, then we can keep going. So, but this is not a long. In my context. Context can change. Right now, it's outside it for me. For other traders, different time frames, it could be a long here and they're scalping to here. What's your time frame? What kind of range do you need to qualify a trade? That's what the trade plan is about, and that's what TraderLab is about. You have questions? Jamie, the trading plan, I'm getting a question from Jamie. Thanks for the question, Jamie. Trade plans are all done prior to the open based on yesterday's behavior, RTH, ETH behavior, which sold off and checked yesterday's low, and then developing time frame. And you're using the higher time frame also in that for a broader stroke. This is the retail price in the higher time frame. So we are trading outside back to that and that. This is yesterday's high volume. So we know these statistically. But the more important part of this is not the statistics. It's the context. That's the first piece. What is the context? Well, the market, the shorts got squeezed yesterday. What happened to the longs who came in yesterday? They got thrown under the bus in the ETH. What else happened in the ETH? It sold off. What does that tell you about the ETH? There's shorts in there. What happens if we start coming up? The shorts in the ETH become buyers, and we have stops over yesterday's high. So this is our primary target. Well, not primary, but let's just say high probability. And then, because of stops. And then, so we would know this before the open. What we do, and this is still a possibility here. What we don't know is what's going to happen. We only know what might happen. All this is done before the RTH open. Then you got to know the reports. Powell speaking at 8:30 at RTH open, I should say 8:30 Central, and Jolt's job report. These are key elements. So for me, I didn't have any trades. I don't care. It doesn't matter. I'm not here to be compulsed in. I'm here to take what's called intelligent risk, and I take stops under best conditions. I'm certainly not going to add other random elements in that can distort the market, like somebody sneezes at the podium, or they say something, a comment about interest rates, or something that just the market gets a little shaken by. And that little shaken, because there's algos that read the news or hear the news, they're going to respond instantly. We can't respond to that. That's not my business. In other words, what I'm saying is that's not the business I'm in, to gamble. I could go to a casino and get a cocktail and take it to the buffet, and then I know I'm gambling. In the business of trading, it's, to me, intelligent risk. And if I'm going to take a stop, I don't want it to be because I was gambling. I just want it to be that I follow my plan and I'm playing a statistical edge. So anyway, I hope that answers your question, Jamie. Hey, Fred. Fred's asking me how long do I go back and vet a trade, sample size. 30 to 50 iterations of it. Doesn't matter. It could be 30 to 50 in one day or 30 to 50. It has to be a consistent anchored process. In other words, anchored, absolutely defined. If you have any random elements that come in or come out of it, then it's garbage from a statistical point of view. Because your mind is going to see patterns, which may not have an edge. A lot of traders think they see something work, and everything works, by the way, at times, but things don't have an edge. Your mind's going to remember when something works. It's going to tend not to remember when it doesn't work. Taking trades like along here, statistically may have no edge, though you'll see a bounce off it. You see? Does that mean you buy this? Well, if you actually, when I mean you, the collective you do the work, you may see that this is a target statistically, but it's not a location to get long, even though the market can come up and take out this high and keep going. Your mind is going to go, well, I should get long when it comes back there. Well, what's the probability of getting long here after the IB high statistic has been taken and yesterday's high statistic has been taken because of the fuel? Now, here's the other piece. Suppose those statistics were still open. Does that change anything? If you're not asking that question, you're not thinking in a complete picture, because statistics play a part. If I know when I come down here that I have a 70% probability, and let's assume we hadn't taken it out already, of taking this out, and I know the stops are here, that might be a trade I'll take. If those stops have already been taken, this is not a trade I'm going to take, because where's my fuel? I know I got fuel above this high, and I know I have fuel here. I also know I have a target up here. It's not primary. These are. So I'm saying is, for me, I just watch it and I go, that's nice. Where's my range, by the way? Where would I be trying to go if I did get long? Here. This might be a short right here if we rotate up. I don't know. So we'll watch it. But to try to answer the question is, where is your edge? Now, Fred, where is your edge? So the thing is to try to keep it simple as you can. So when I'm trading, if I get my statistics taken out, I'm not going to put the same trade on, because now the fuel, which is why we came up here to get the buy stops out. If I don't get buying above here, then I have no reason to go higher. If anything, the longs that are in these legs are now the ones that might get put on the hook. And I don't know, but this is not a long for me. And by the way, it can very definitely come up, take these guys out, and keep going. It just isn't my trade. That's the way I look at it. Not, gee, I got to get long here and sell this or get short here. I'm not doing that. It's just not worth it to me. I'm interested in the larger swings. And I'm taking the same risk to get a 20, 30 point rotation or a 10 point rotation as I am to go from here to there and I can't execute here. That's the other piece. So if I was to get long, it would probably be here. My stop would be here, and I'm going here. Why would I do that? I'm answering you, Fred, and I'm also kind of giving everybody a broad stroke comment. Because right here, there's going to be stops in this area above here. Let's watch the behavior together. So here's what I know. This is the mean, retail. That was my target. I can fall out and come back here, or when this shifts, if I don't reject it, I'd be out of the trade. Because right here is saying too low. So if it's too low, and this is retail, if it becomes too high, I go this way. If it's too low, I go this way. Where's my stops? They're here. So now I want to see what happens in relation to this. Let's just see what it does. I have no long. And I understand that you're going to be thinking, oh, I could have taken a long. Of course you could. But does it have an edge? That's the real question. Not what it's doing right now. So let's watch the behavior here. This is an area to observe. It is a high volume area. It's above the IB where there's going to be stops. And we want to watch behavior here now, right here when we test it. So let's see what it does. Not a trade recommendation. We're just watching behavior together. Yeah, an edge, Fred, is high statistical probability. And there's a couple components to statistical probability: risk reward, range. What is the probability of getting risk neutral before you take your stop based on a two-lock configuration? Notice the behavior here. So let's just keep an eye right here, guys. This is order flow based. So part of having a tool like Bookmap is to understand what happened here. What you had was buyers, sellers. The sellers consumed the buyers here. What happened here? You had sellers and sellers. So sellers absorbed the buyers and sellers here. These guys got stuck. Buyers are above them. Buyers and sellers interacted here. The sellers got pushed out. Now you have the buyers. Now we're coming back to this location where the buyers got run over. Now we've got to see the reaction here. We got the stops at the IB high. Now the possibilities are the following. We continue, take out today's high, and go here, or revert back here and continued down. And I don't know. So that's why I don't have a trade here. Now, if I'm scalping, which is a different conversation, I might have activity here. We have buyers here. This is important now. These buyers, so you have buyers and buyers. Can these buyers here that absorb the sellers get above here? If they can, then we continue up into this liquidity. This is how you can navigate this. So let's see what it does. This is important here. And of course this. Notice what's happening in the order book. Liquidity is coming down. So we want to watch the behavior. I don't have any trades here, okay? Now, I do know this is resistance. Scalping is a different thing. But in the TraderLab, in order to become, in my opinion, a successful trader, you need to survive and you need to understand market mechanics. Once you understand market mechanics, and this is called trading in fractals, and I advocate for building a business that you operate in a broader stroke, because you only have time and capital. Operating in the broader stroke puts less pressure on you, and you can see your trades coming. When you get into this, it's a different element. There's a lot more stress and requires a lot more proficiency. You know, when you're going to do something like this to this, like here to here. So I don't suggest that traders do this until they're already profitable in a higher time frame. Now, what's a higher time frame? It might just be these kinds of rotations. You know, this to me, this is fine. You know, I like this. You know, I can get short at 41 and get a 10-point trade out of it. You see what I'm saying? How many of those do you need a day to have a terrific day? When you start doing this, you're taking the same risk. And you're going to basically here into the stops and back to here. Is that, and you can't enter here, you know. So it just doesn't mean, I don't do it. I don't know. Because I'm not here for action. If I want action, I have other places to get it. Like when I throw a steak on the barbecue, now there's action. Questions, guys? Fred, I hope I answered your question. CRUD? What's CRUD? Two-lot pie? You're holding for a naked VPOC two-lot? What are we talking about? This and this is the next obstacle right here. So this is the same as that, is the same as that. They're the same, but this has more volume and more meaning. So we may never, I don't know what's, you know, I'm not in the prediction business. Magic 8 Ball says, try again, you know, ask again. You guys ever have a Magic 8 Ball? We had one on the trade desk. It was, as long as nobody threw it at a monitor, we did okay. Which did happen from time to time. Watch the behavior. So you notice where we came. You notice where we came. I cannot make this up. I know what, this is why you need to understand order flow. And if you don't have a high tier tool like Bookmap, you are really, as they say, I think, well, at a tremendous disadvantage. Because we are trading primarily against other retail traders. And most of them are doing the typical toolbox plug and play indicator, which is unfortunately not necessarily a sustainable, profitable plan. And maybe, I'm sure it is for some, I just if a huge number, over 90%, according to what I read, of retail traders fail, run out of money and run out of time doing those things, then maybe the key is learn from what they do and what you are doing or have done. And if you keep waking up in the same place, I call it Trader Groundhog Day. I did a webinar on it. What you're doing is trying to fix maybe something that's dysfunctional. A process that you have accepted as a truth or a belief, and you believe it's a matter of persistence and making it better. The problem, and this is the problem, is in a random environment, you're going to have winning trades. And that actually is a problem. And the problem is that if you have a defective process, even if you close your eyes, blindfold yourself and throw a dart at a dartboard, assuming you can hit it, you're going to hit that dartboard, maybe even get a bullseye. It doesn't mean you have any edge. The same thing happens to us as traders. Things work randomly. Gamblers walk out of the casinos with cash randomly. But over time, the casinos extract the cash from the gamblers, even though the gamblers win. It's called overhead and cost of production. We see these patterns, and our mind is going to fixate on a pattern that may not have any edge. The fact that the market goes from here back to here is something I can read. But I also know what this was. So I anticipate a reaction to it. Not necessarily a reversal, but we could come right back here. If I come back here and get under here, then we can come outside over here and take the stops out, or not. I don't know. So the fact that this came here, this is now what's called inside out trading. In mean reversion, it is outside in trading. So that's why the last longs were out here, not here, not here. And it may do whatever it's going to do, right? So I'm just sharing with you a concept of randomness and structure. Two-lot tie, I'm not used to saying that. Two-lot tie was planning for this target, and it is possible. But in between tie, what's going on here? This, the absorption, this, and if we're in a two-sided trade, it's called mean reversion tie. You cannot ignore the context. We're inside of two contexts. We're in a long context only, or you trade inside of it, which is outside in, and then potentially outside in with an upside bias. So if you take this short, this is your primary target. And then if you, quote, get lucky, and that's part of our business, you come out here. If this shifts up and you don't get back here and under here, then you're out of the trade. Simple. Still a 10, and that's for your runner. I mean, you could be done here, or because that's a primary objective. And then the bonus round is out here. Or you're just holding along and you're way out here somewhere. And you join Rod, who's in the TraderLab, and you go to the gym. So let's watch the behavior here. It's all trade plan specific. Is everybody with me? Liquidity is not very clean. What do you think? What could be the reasons? Ethereum high. Thanks for asking the question. I don't know why this algo is in here. The bracketing algo, it never trades. It's just bracketing. Turns on at 7 a.m. Central Time. It's like, maybe it's on a timer. I mean, literally. And it just brackets. I ignore it because it's not material. What is material is the resting liquidity in the book. So I'm watching the resting liquidity, not the algo like this. Algo. I call it trash. You see how it's bracketing? This is what's important. And what also is important is this. Because of the absorption here and the buyers in this right here, where you see these icebergs we're buying, they got absorbed. This, the sellers got run over here. Now we come back up to where? To pick the stops up here. Then if we can't get above here and the buyers are trapped here, we come back potentially to here, back to here, and not a recommendation. That's how I am narrating it. So I'm looking at higher time frame, which is up. Main target was this. The bonus round, if we can take out this high, we can go higher. If not, then rotation. Write this down. Market goes up to go down. Market goes down to go up. ETH, market went down to go up. Now the market has gone up. Is it time to go down? Or are we going to keep going up? Higher time frame-ish, up, might be done. See, this is the kind of the conundrum. So then it's outside in, not inside out, unless it's part of your plan. See, the fact, now when I say it is or isn't something, I'm speaking about a broad stroke, because I believe in alignment. In the shorter time frames or fractals, you could have a different plan inside a plan. But that's not the purpose of this stream. We do discuss that in TraderLab. But for the purpose of the stream is to help traders understand market mechanics, how it works, why it does what it does, and how you can get in alignment. I'm not here for scalping. Really not. Because you can burn yourself out, blow yourself out long before anybody develops the skills to be able to operate in a shorter time frame. I think of time as fractal. When we go from here to here, it's a fractal. This is a rotation back to the mean. When we get into this and this is a mean up here. The market has the possibility, again, here, which is where we are, quote, flirting, and there. I'm seeing my liquidity here and back here. So this I know potentially is resistance. I have buyers here. I'm seeing my sellers here. So right here is contested. If I break out of this little thing, I then have back to here as resistance. It was too high. Now we're just going to see what it does. And if it rotates, where's it going? Here. No range. If it gets under here, where might it go? Back here. And what else here? The mid. What's under the mid? Stops. How can I get long here? And no matter what happens, I can't. So it's not my trade. But here's the thing about TraderLab. If you can get the broad stroke, you can get the shorter time frame. The thing is, and I'm always going to come back to this, my risk to take this trade is the same to take that trade. It's the same to take the long at a 26 going for this, which is a 10, 12 point trade. Am I going to risk 2 to 3 points, give or take? Try to risk 2 or less, but let's just say it's 2.5. Call it 3. Am I going to risk 3 points here to go to there? Right there? From here, and I've got to get 3 points to get risk neutral. What's my probability? It's not good. So that's why I'm making a point, because in trading, it's the risk and the obstacles and the potential target. All those pieces come together. And the context is the driver of everything, the chassis. And that's how if you come to the TraderLab, there's a link in the bottom of YouTube, and there's no cost to join the TraderLab community. It's a serious community about the business of trading. It's not hyperactive scalpateria. It's not action oriented. It's actually profit and business oriented. And a lot of traders or wannabe traders come into trading thinking it's about the action and the dopamine fix. It really isn't. It's just really business. And it's the business of patience and statistical probabilities. So where do you have an edge? Do you have an edge here? Maybe. Me, if I get long, since I can't execute here until I have a trigger, I might be getting long, in this. Stop is under here, and then I'm going maybe here on my best day, and I'm using a shoehorn. If I don't get back above this, then the trade's no good. So I'm just trying to make a point about your job is not to just click the mouse. Your job is to take intelligent risk. Risk, if you're taking it for a dopamine fix, that's not a sustainable model in this business. You may be driven by the dopamine and the desire for the chemical release in your brain because you like how it feels, right? And you'll rationalize all the reasons to do it. You'll rationalize that, gee, this trade, I should have taken it. When your mind is doing I shoulda, that is your competitive nature coming out. The hunter, yeah, I should have chased that saber-toothed tiger. I would have got him this time. No trade for me. Hope that makes sense. I'm getting a question from Ethereum. Thanks for the question in YouTube. Do I watch the SPY or the SPIX? No, I don't. I'm not trading them. I don't. I used to watch everything. I mean, want you to know, I used to watch 32 markets at a time, all over the place. Tick, trend, advancing, declining, up volume, down volume, created systems, and a lot of that stuff. I watched everything. Of course, the VIX, all that kind of stuff. I don't watch any of it because everything is here, right there. So if I'm going to watch something, I should be watching this because none of those things are predictive. We have a very efficient market. Don't forget computers. So things don't get really out of alignment. There's so much efficiency. So I'm right here. Because if I'm looking anywhere else and putting variable random inputs into my mix, then I have nothing. Again, just an opinion. I have randomness. Sometimes it's this. Sometimes I put more pepper in than salt. This time I put paprika. Is it the same recipe? No. And do I expect the same outcome? How can I? So part of an edge is not doing what other traders do. And however you define that. For me, it's all superfluous inputs, no indicators, nada. I'm being as close as I can to the interaction of the participants. I see my sellers here. I have my buyers above them. If I get buying above here, I'm going to come up here. Right here is very important. If these buyers cannot move the ball forward and I break below, which at the moment I'm not thinking that's going to happen, but it could. If it does, then potentially back here. Let's watch this behavior here. Remember where we are. Right now, it looks like the buyers are in control here. Let's watch right here. Very important what happens right here for the continuation. This is how Bookmap can help you. So I know this is resistance. And what you got here was buyers were here and they got pushed out. I come back to it and I get my sellers. The buyers are pushing the seller out now. And that's why we're getting buying above here. So now we got to see what happens, okay? And there's nothing here for me to do either. So I'm just a tourist. For me, the last trade would be the short here. And nothing with this. Now, that doesn't mean you can't be rocking and rolling with it. Any questions? 55.31. Yeah, Nani, if they're part of your trade plan, yeah. Um, they're not qualified for me because we were in mean reversion. My last long was out wherever it was, out somewhere over here, wasn't it? 9 and change. This is so for me. This was my last long. This so that was my long, and then up into the targets. This is a short back to here. This is not a long for me. It could be. I mean, I understand you take the long. I get it. It's not a long for me. It could be, but it's not a structured trade. It can be a structured trade if it's yours. See what I mean? But for the stream, it's very important that traders understand that it's about waiting for trades that are vetted, that have a statistical edge. Individual traders, and Nani is one of them, who is active and has been active in the TraderLab. Appreciate that, Nani. This can be a long. It could be a long for anybody, but you have to know where your obstacle is, and you got to enter well. Your obstacle was this. See the behavior? So here, the sellers failed. So this suggests potentially higher, not a recommendation. Back up to this. Back out up to this breakout. So this would be the area I'd be thinking about. So you have this and this, not my trades. Okay? Nani's trades. These are okay for Nani. And you can extrapolate these. If you're in the TraderLab, what the idea of TraderLab is to give you a broad stroke and teach you discipline and the ability to sit still. As you develop, what happens, and this is for everybody, you start seeing the same behaviors in what's called fractals. I think of fractals as Russian dolls. In other words, time frame, if you will, except there's no time here. It's really more based on rotations and the behavior of the participants. It's not based on the clock, you know. So the behavior is what creates this. So you'll notice we came out, and here's your volume. This is too low. We shifted high. This is why Nani is getting long. Here and here are viable longs, but your range is constricted. So you have to be able to execute for the risk you're taking and get risk neutral. This is our liquidity. Let's look at where we felt. This is where the liquidity was. This is too high. Right in here would be your next targets coming up. Again, that's not a trade I take. And if we take out the high, this is the next target. And we can go further. You know, we can come up here also. Not saying it will. It doesn't matter. So we'll see what it does here. Nani, you know what I'm talking about, right? Two Left High is asking me, when is liquidity a magnet? It's liquidity, it's a test. So right here, we had a lot of sellers. And you'll see what happened here was they were absorbed. So, and the fact we came up above it, this is the reaction point. So these buyers, there was more, so that you see the absorption selling. I got 5 minutes left, so please post your questions. This is resistance here. So if I'm taking longs, which I would not, I know this is an obstacle. I want to trade into it because of stops. And this is an alignment. You see where it is? So I know this is obstacle right there. You can see it. So if I get long, I got to be scaling, and then it's manage the trade. You know, right here, buyers were absorbed. I'm sorry, buyers absorbed. Sellers came in, they got absorbed. Sellers here absorbed. Buyers here absorbed. You can see it. And we're still marching. Um, this is where your liquidity is. This is a viable target. And if we take out the high, then, we can go. That's what I know. And as far as the liquidity, the market, notice it's coming back in. That means there's potentially sellers sitting up here. And anybody, who has a high tier order flow tool, or has Bookmap actually, or other tools where they can look at over here at the limit order book, they'll see that they could just look at their dome and they'll see it. But as the limit order book is fluctuating, they're not seeing the polls and the ads. This is our advantage. We don't have to look here. We can look, all of it can be right here. This is a great tool to heat map. And also we have liquidity marker, other things on here that can show us the ads and polls. We see selling icebergs in here, and we see buy stops. Buying icebergs, buying icebergs, buying icebergs, buying icebergs. So selling icebergs. So we know there's two sides active. And remember where the last place the buyers failed was there. If we come up and this liquidity's front running it. So I don't think this has a lot of meat on the bone, but it's not, doesn't matter. It's plan. It's not prediction. If you're interested in TraderLab, guys, and I want to invite all of you to the TraderLab, there's no cost. It's a 24-hour, 7-day-a-week community. There's 60 PDFs of structured trades, these trades, and derivatives of them that you can download, reverse engineer. We focus on market mechanics, how it works, why it does what it does. I do not use indicators. I think they're more of a problem than a solution because they're inconsistent, and retail traders think more indicators creates more certainty. Certainty does not exist in this business. If you can accept you're in an environment that is random, then you're not going to seek certainty. You're going to seek probabilities, statistics. And the statistics are how the casinos operate. They extract an edge over a large sample size of random outcomes interacting with the gamblers. If you change your viewpoint of the business, then your objective is not going to be to predict what's going to happen, because you can't. If you can accept each moment in the market is unique, then you're going to be saying, what are my probabilities? Not what is going to happen next, because we don't know. It's a different mindset, but that is the business of trading. And most of us come into this business thinking that we're going to predict what's going to happen, how high it's going to go, just isn't part of this, in my opinion, in my experience. Going on 45 years of this, so I've kind of gone down the same path you guys have, and probably with similar results early on. I started in 1980, so I've had time to do just about everything that's out in the public space. And so everybody else has done the same things you're doing. How are they doing? Are they still in the business, or are they just passing through? I call that Trader Groundhog Day. If you click the link in the bottom of YouTube, you can visit the Bookmap Discord TraderLab Community, download the 60 PDFs of structured trades. There's a library of webinars. Start with the primer webinar. It'll give you a high-level overview of this process and the business of trading. Then determine if you want to be part of this community and if you want to develop a business plan in order to participate and maybe create a career in trading. Trading is not for everybody. Absolutely not. I believe if you come to TraderLab, you can learn the trade if you do the work. However, whether or not you can sustain a career in trading, it's going to take a lot of effort, and deconstructing what you do now and replacing it with a statistical edge and the discipline to operate in a random environment. Please give a thumb up in YouTube. Thanks for visiting TraderLab today. These streams are available exclusively to Bookmap Discord TraderLab participants to reverse engineer, review, screenshot, and continually push forward and develop your edge. Also, please remember there will be no stream tomorrow or Thursday due to the 4th of July holiday here in the U.S. Thanks again, guys. Please give that thumb up on the way out. Appreciate you guys, and I appreciate you visiting the TraderLab. Look forward to seeing you on Friday.